Hi, everyone. My name is Jason Hitchings. Thanks for joining us today. We're just going to dive right in because I think we're coming up right on 11 Pacific, 2 Eastern. I'm on my laptop today, so sorry if the image is a little less clear. We are going to dive into two topics today. One, we're going to go in a little more depth on the Today tab. I covered quite a bit about the Today tab on the last session, but I wanted to give a little more detail on a few aspects I didn't have time to cover last time. And then we're going to dive into the MACD momentum strategy that we have on the Today tab and just go into a lot of detail about that. And then Max and I will answer any questions that you have at that point. Thanks for being here. So we'll just go through the boring part real quick. Legal disclaimers. This is not a solicitation to buy or sell any security ever. This is not advice. You should read the characteristics and risks of standardized options. The results here are provided for general information purposes as a convenience to the viewers. Materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more money than their initial investment. Past results are not necessarily indicative of future results. The risk of loss in trading can be substantial. Carefully consider the inherent risks of such investment in light of your financial condition. Great, so I think most of you know who I am. My name is Jason Hitchings. I'm the CTO of Capital Market Labs, and I'm the person who did the actual coding for TradeMachine. It was Ophir and I together who decided everything that was going to be in the product and how to allow people to simulate historical results and how to improve their future trading. So yeah, I've known Ophir for a long time. I've been in fintech for pushing 20 years now, and I've known Ophir since about 2006, 7 or 8, I think. Yeah, so he's been just an awesome human being the whole time. Okay, so the agenda today, as I mentioned, we're going to dive a little deeper into the Today tab. I want to show you a little bit of how it works under the hood, and then we're going to look at the MACD momentum strategy, and then we'll just do Q&A. Okay, so here's the Today tab, and we're going to look at the MACD in a little more detail to see how it all works. So one question is, how often do these Today tab strategies actually check for signals or triggers? The answer is that we start about an hour after the market opens, and then we check every hour from that point forward. And that should be fairly familiar to you because that's also exactly how often we check your own customized alerts that you set in the Alert tab. And there's a really good reason for that. So let's see how this actually works. So I have a special internal account that we just call alerts at SimpleBiz. And what we actually do is in an automated way, we look at all of the scans we've ever done in the market. We look at the results over various timeframes, and then we subscribe ourselves to alerts for the best strategies for every single ticker from all the strategies that we've created, or out of those 13 that are showing on the Today tab. And we just actually add them. And so on any given day, you might have, in this particular example, we have 1,465 strategies that we are actively looking at for the current day that meet all of our quality controls, including, if there's been a lot of liquidity issues or that kind of thing. And then we subscribe to the alerts ourselves, and then as they trigger, we format them and we present them on the Today tab. But it's really the exact same tools and functionality that you have access to. We have just created our own strategies and our own alerts, and then we just format them a little bit differently. And in order to determine if we want to set an alert for the day, we look at the historical win rate and percent return, average trade return, liquidity, and we look at those over various time frames. Generally, for instance, if over the last 3 years there have only been one trade, even if it was a great trade, it was 1 win, 0 losses, and you made 150%. that wouldn't really be enough of a track record for us to include it on the Today tab. And so we apply a lot of filters and kind of come up with a basket of stocks for the day that we think are going to be the most interesting to trade based on the historical results. And then we start each day fresh. So it could be 1,465 one day, then 2,000 the next, and then 1,200 the next day, just depending on the recent backtest results. So yeah, this is just an example, like looking at Apple, there's, I think, 40 scanned strategy results from Apple. And so we're really just parsing these results. We calculate some of these fresh, if they're not fresh enough, and then we just actually, behind the scenes in an automatic way, subscribe to the alert the exact same way that you would if you just clicked down on this alert thing and said add alert. And this is an actual view from this account of things that have triggered today. If I just went to the account tab, looked at the history, and then looked at the messages that have been sent, I can actually log into this email account and see the actual, same alerts that you'd be getting. And this is an example. This is where it appeared in the historical alert messages from the alerts tab, and then this is where it showed on the Today tab. Now we add a little bit more information just to make it nice to look at. We show the percent return, we show the wins and losses. So we capture that additional information on the back end just to format this in a nicer way. But other than that, it's exactly the same thing. And then we just have a little share link that we use to share the backtest result. So the good news is that you literally have access to everything there to make your own version of the Today tab, where you can set up custom alerts on either, you can take our strategies and tweak them. You can take our strategies and say, look, I just want alerts on things that have 100% win rate. So you could go down, this is the MACD strategy, and you could say, just give me the ones that have 100% win rate. I want alerts on just those. You could say, hey, the MACD doesn't have a stop or a limit. I like to use stops and limits. Or you might want to have a limit and not a stop, or vice versa. So, or you might just want to hold them for 7 days. Like, you could take the foundation that we've created for you, and you can do anything that you want with it, and especially for Platinum members that have the faster access to faster servers, because you prepay us, we prepay Amazon, and then we can kind of afford bigger servers that way. So for Platinum members, you can backtest a whole portfolio in a very short amount of time. I think the NASDAQ 100 maybe took 60 seconds or something like that for me to backtest using this MACD strategy. Yeah, and then you can just subscribe to whatever you want, add them to alerts, and you'll be getting a customized version, and you can actually get text alerts that way as well. So you really have access to everything all the power that we do, especially with this new portfolio backtesting. Okay, we're going to dive into one of the strategies on the Today tab, the MACD momentum, and we're going to look at that in some detail. And so here is the tile from the Today tab strategy. And you can see that there's only one that triggered today. So after we apply all of those filters and all those water controls, we've seen one that met those conditions today. And so when I click on that, it pulls up this screen. There's quite a bit of information here. And so I wanted to choose this one today to dive into because there's really quite a lot to look at. And so let's dive in and kind of take this screen apart piece by piece. Okay, so this uses a technical open. When it says open here, and it shows the technical conditions. So this is using an RSI, and it says the RSI has to be below 40. This is the MACD indicator, and I'll go into it. We're showing you all the details because you can customize this. So this MACD 12 days versus the 26 days can be customized. And so that's why it looks like a mouthful. But what this is saying is that the MACD is greater than the signal. And the signal is set to 9 days right now. So what is that stuff? So let's look at that. So this is the MACD chart. You can see that the black line is the MACD. The signal is the orange line. And then this gray bar is the MACD versus the signal. So the numbers in and of themselves can be a little bit confusing if you haven't been using the MACD, in your own trading much. So let's just do a quick dive into it, or it can be a refresher if maybe you use it, you know how to use the chart, but you haven't thought about it in a long time with all these lines and bars actually mean. Okay, so if you hover on the very last one, you can kind of see all the details, or it shows most of the stuff along the top as well. Okay, so the black line here is the MACD. And what the MACD is, it's the difference between a shorter term moving average and a slightly longer term moving average. So in our case, we look at the last 12 days of movement, and we subtract from that the last 26 days of movement. And so when the value is negative, it means that the stock price for the last 12 days is below the average stock price of the last 26 days. So the 12-day average is below the 26-day average. And as a little refresher, if it's an exponential moving average, all it means is that it gives extra weight to the recent data. So the recent couple of days are going to get more value in that average than the very first days when you look 12 days back. So these values are negative here. This is the zero line. So these are negative, but you can see this black line is above the orange line. So let's look at that. So here's the MACD as mentioned, the 12 days versus the 26 days. And then looking at the 26 days, this is 26 days of data. And you can see like, okay, it was higher 26 days ago than it is now. So certainly when you're factoring in these data points, the 26-day average is going to be higher than the 12-day average. But how do we feel about the momentum here? So this is kind of interesting. It was plummeting a lot, and then it's kind of reversing and then stabilized out a little bit. And so the MACD is negative, but is this good or bad momentum? The signal line that we're using to determine that is we're looking at the last 9 days of the exponential moving average. We're kind of looking at it, on a basis of how much it's changed, so that we can kind of do this as a comparison. So it's kind of a normalized look at that. And we're saying, when you look at sort of the last 9 days of movement versus the last, when you compare the recent movement to the further back movement, you actually see that the trend has been pretty good. So that even though, like looking back 26 days, it doesn't look that great, the momentum recently is good. Oftentimes people look at these crossing points as being of interest. And you can see as these bars increase, that's the actual distance between these lines. So you see the maximum distance here. And then you can see that essentially the strength of this signal is how much space there is here. So the signal is getting stronger and stronger and stronger, and now it's, these values are getting closer together. But that's giving you a sense of what the recent momentum is. And that makes sense if we went back a few slides, like, wow, that's strongly moving in the right direction. So that's when the signal got really strong. And it's, there's still the kind of, difference between the recent movement and the further back movement's not bad, but this is where it kind of peaked in strength. And so the indicator kind of captures that momentum all in place. Okay, so what else do we have in CML's version of the MACD strategy? Well, down here it says never trade earnings. And so what that means is that if you have the strategy in place and then there's an earnings event coming up, 2 days before the earnings event, you would exit out of the strategy. So you would not hold it through earnings. Then after earnings pass, 2 days after, you would only enter back into it if the technical conditions are still true. But you'd essentially be starting the trade fresh. But the main thing to consider is, one, if it's in the middle of an earnings event, don't buy it if you want to follow the back test. And then number two, if once you come up to the next earnings event, you may want to exit it. And you can actually set an alert within the alert section saying, well, notify me 2 days before the next earnings, and I can put a note and say, exit my MACD strategy in SSL or anything else, so that you don't have to think about when the next earnings event is. It'll just send you a text message when that's going to happen, or an email, so that you'll know when to exit it. So our version of the MACD does not have any gains or losses set, any stops or limits. And so, yeah, it's kind of nice because we didn't find that there's any advantage with this particular strategy to exit it early. So the only time that you really need to think about exiting it is when it's expiration. And you can set a calendar alert inside of the alerts to tell you when the expiration is, so you don't forget, if the thing ends up in the money, you don't want to forget to close it out. because you might not want to be assigned the stock. Yeah, and you can also set if there's an earnings event coming up. So you can set those calendar alerts in terms of when to exit. But yeah, there's no specific stops or limits, but of course you can always test it yourself and see what you like better. Okay, now there's the custom strategy. And so if you click edit on the custom strategy, when you click the share link, it automatically creates this custom strategy for you. And it gives it the name that we gave it way back in the day when we first created this. So the name's a little funny. This QA, you can kind of view that as CML. So it's basically the CML diagonal 50-20 call spread. And what we're looking at here has two legs. The first one, you're going to be long the 50 delta call 60 days out. Doesn't have to be exactly 60 days out. It's going to look as close to 60 days as it can. And it's going to be long one contract. Additionally, it's going to be short a call. And it's going to be looking for something that's around 20 delta and about 30 days out. So this 20 delta is going to be quite a bit out of the money. And it's going to be shorter time frame. So this option on top is always going to be worth more than this short because one, it's higher delta. So it's more closer to being in the money or at the money. And it's further out. So if the option is closer or it has a higher delta, which you can view as a higher chance of ending up in the money. And if it's further out, it will always have more value than the option that is short, that is 20 delta and 30 days out. So it's further out in time and it's more in the money. So this will always have more value. So the reason that this exists here is because when you own this option, every single day that expires, every single day that passes, you're getting closer to expiration, you're losing value in the option. So when you're owning options, like time is counting against you. The good news is if shorter term options lose their value faster than longer term options. And options that are out of the money lose their value faster than options that are at the money. At the money options hold their value the absolute longest. And so this is a clever strategy that Ophir created. And what it does is gives you the potential to capture that momentum over the long term. You can never lose more than you initially put in with this strategy, because this is always going to be worth more than this. But this short option is decaying faster than the at the money option. And so it's helping finance this option a little bit. It's saying, we're going to hold this, and this is going to depreciate. If nothing happens, this one's going to go down faster than this one. So if nothing happens in 30 days, you are likely to find that you actually made a teeny bit of money in this strategy with nothing happening. Depends a little bit on other things that are happening with vol and that kind of stuff. But yeah, that's the benefit of selling that shorter term out of the money call. Now, this strategy says close all legs of the front month option. So when this first expiration expires, let's say the closest it could find to 30 days was the February 3rd Friday options, you're going to close the whole position at that point if you want to follow this strategy. This will not roll the short leg and try to do it again. It'll just close the whole thing and then wait for the technical conditions to be true again and then start fresh. That's what that little checkbox means there. So how is this strategy done? Just because it's on the today tab doesn't mean that you have to want to trade it. So I just did a quick back test of the NASDAQ 100 with this strategy. And yeah, 3 years we've, went up a lot, then back down, and then up a lot again. So, it's not surprising that something would do reasonably well, but there was also a lot of chop, a lot of up and down. And the average trade return has been 23% per trade over that entire time frame. So that's pretty great. The percentage of wins is just okay, but at least it's over 50%. And these are, being long options. So that's not bad. And selling that out of the money 20 delta call definitely is helping this winning percentage. Yeah, but a 23% average trade return over that time frame is pretty impressive. We tend to look at this more than the total trade return, because the total trade return is stocks that have a high dollar amount are going to get a huge amount more weight than low dollar amount stocks. So it can kind of bias the results one way or another. If you ever see a total return that's negative, even though the average trade return is positive, it's for that reason. Because you could have a couple stocks that do really well or really poorly, that kind of make the total return not really reflective of sort of if you just if you put $1,000 into every one of these trades equally what your average trade was. So yeah, over the last 3 years, this has done quite well. But yeah, test 2 years, 1 year, and you can dive in and customize as much as you want. You can set all your own alerts on top of this or any other strategy within TradeMachine. Great. And so just as a reminder, if you want to take the strategy as it's defined in the Today tab, you can set Today tab alerts, and then you can choose for MACD or any other strategy if you want all the alerts or NASDAQ 100 or anything else. So this is kind of a fast shortcut to the kind of customized version. So you might start here, and then over time, you might start to tweak these strategies to the way you like them. Great. So from there, we're going to dive into some Q&A. And let's turn it over. I'm going to have Max take over in just a second, but I'll answer the first couple questions.